What's going on, guys? In this video, we're going to be looking at the Realty Income Corporation, ticker symbol O, which is known as a REIT. Now, real quick, for those of you who don't know what REITs are, we all have our lovely stocks that we know. For example, Apple. The great part about stocks is they're easy and affordable to own. You want to buy Apple, it is only going to cost you a couple $100. Or if you use other platforms like Robinhood, you could even buy a fraction of a share. You could throw $5, $10, $20 into a stock and then you own it, and then you can enjoy the appreciation that comes with it. But some of us want to own more than stocks. Maybe some of us also want to own real estate. This is a lot harder because of the cost. You want to buy a house, you want to buy a building, an apartment complex, it could cost you hundreds of thousands, if not millions of dollars. And some of us just don't have that cash on hand. You go and get a mortgage, but that's also difficult. You need a substantial amount of money for a down payment, and you need a great credit score in order to get that mortgage. So there's this alternative called a REIT, which stands for Real Estate Investment Trust. A REIT is very similar to stocks, as in you can find it on your brokerage account, and it will only cost you a couple $100, or there's even some like ticker symbol O, Realty Income Corporation, which I'll be reviewing today, that costs less than $100 as I'm recording this. So this is Realty Income Corp. You can see it looks like a boring stock. Again, it's not a stock, it's a REIT, but it looks very boring on paper, like it really doesn't do much. It's gone up over the past 5 years, 45%, which isn't crazy at all. We could look at some other stuff, like even Apple has gone up 479%. We could look at the SPY, 115%. Or how about the Qs has gone up 215%. So why am I talking about this ticker symbol that has hardly performed? Well, because there's so much more to this asset than what meets the eye. So forget about the short term, looking at 5 years. This is something that I personally am going to add to my IRA and 401k, and something that I plan on holding on to for a very long time. And I won't be surprised if this outperforms any other position that I have in my retirement accounts. So let's go all the way back to 1995 when this IPO'd. It's up 737%. Now that's pretty good over the course of 26 to 27 years. But let's compare it to the SPY. The SPY is up a little more, 840%. But there is one thing that we are forgetting. We need to account for dividends. So we're going to go down here where it says adjust. This is going to adjust the data for dividends. So we do that. The SPY is up 1,500% in less than 30 years. So that's great returns. But let's jump back to O, Realty Income Corp. It's up 4,525%. So it's done almost 3 times better than the SPY. So why is it such a big difference when we put the dividends in? Well, a REIT typically gives higher dividends because they just have a bunch of buildings, whether it be houses or corporate buildings, that they're collecting this rent every single month. So they have more than enough money to distribute out to their shareholders. And in fact, if we go to the daily chart, you could see the dividend is given every single month, as opposed to if we jump over to the SPY, where you're only getting one dividend a quarter. Now, I know I'm kind of jumping all over the place, but now we're on Seeking Alpha, ticker symbol O, and you could see right here the yield, it's giving a 4.42% dividend. That's a great return, especially for something that only costs $67. It's been giving a high dividend like that for decades now. So if we jump over to dividends and we go over to dividend history, you can see that its grade is A+. Oh, and we're on Seeking Alpha Premium, and there's actually a link in the description for you to get 50% off of Seeking Alpha. So check that out. I think it's highly worth it. I love using this program. But let's look at the dividend history. We'll go out to max. You can see that it has been raising its dividends consistently every single year since its IPO. And now if we jump over to dividend yield and scroll down, you can see it's been bouncing anywhere between 3% on the low end and all the way up to around 6% on the high end. So you're getting a pretty good yield no matter when you're investing in it, whether it's at a peak or at a bottom. But O is not the only REIT that's out there. Here's some of its peers that you could see. And before I go on further, guys, this is not financial advice. This is all for education and entertainment purposes only. But you could see there are several different REITs out there. And here's some of its competitors. Some of them are a little bit bigger and others are a little bit smaller when you look at the market cap. But we could really dive into these if we wanted to. But for the sake of this video, I'm just going to stick with ticker symbol O. Now that you know what a REIT is and what the ticker symbol is, how its dividends are doing, you may want to learn about how can you analyze a REIT, because it's a little bit different than a stock. So I've been talking heavily about the dividends, and that's one of the main reasons why I want to add this to my retirement portfolios, because I'll have the dividends reinvested for the next 20 or 30 years. And then this should allow it to grow to a very substantial size. And then once I'm ready to retire, it'll be nice to then just withdraw those dividends that I'm getting each and every month. But if we jump back over to the dividend tab, you may notice something. If we scroll down to the dividend summary, you can see right here, the payout ratio is over 200%. And it's been like this for the past 13 some odd years. Now, if you watched any of my other videos, or if you learned from any other stock influencer on the internet, you know that this is a major red flag, and you don't want to invest in something that has this high of a payout ratio. So how is this company, or how is this trust staying afloat? Well, that's because it's not a stock. It's a REIT, so there are going to be different things you want to look at, and payout ratio is not one of them. If you look at any of these, they'll all have, and we'll actually click on this just to show you, they'll all have really high payout ratios, 109%. So going back to O, you don't want to look at payout ratio, because think of it. If you're a stock, so if you're any stock, say Apple, how many locations is Apple really going to have? It'll have its headquarters, it'll have a couple of satellites, maybe buildings in different countries or plants, but there's only going to be a handful of locations. So that's only a handful of buildings that they're going to be able to depreciate. When you're looking at a REIT, its business model is buying real estate and then renting it out. So it's going to have a significant amount of real estate. It's going to have a lot more buildings than, say, a regular stock that's a company. So that's going to be a lot more on their balance sheet that they're going to be able to depreciate. So bear with me. If we jump over to the financials, and if we scroll down, we're in the income statement. If we scroll down, you'll start to see some stuff that you may have not seen before, because these aren't going to be on stocks. Your FFO, your FFO payout ratio, your AFFO. So what is all this? So right here, an FFO is your funds from operations. So pretty much what you're doing with the FFO is you're adding back your depreciation and amortization. And after you add that back, you could see, oh, okay, this REIT is continuing to grow their FFO. Their FFO payout ratio is actually staying pretty solid. This is what you're going to want to see. This payout ratio that says 80%, it looks like we're hovering around 80. This is technically, in layman's terms, your dividend payout ratio. You don't want to see this to start to skyrocket. Then hey, they're giving out way too much of a dividend. They're not going to be able to keep this up. But this is actually kind of very slightly trending down. Meanwhile, the FFO continues to go up. They continue to make more and more money. So that's how you know that this is a solid investment, or at least from the looks of it, they're doing a great job growing as a company, growing as a trust, and paying out their shareholders. So now you know if you want to add real estate to your brokerage account, but you're just starting out, you don't have the capital to actually buy a building, well, there are these options. There are REITs that you can invest in, like the O. which over the long run has some incredible performance. And if the history is any kind of predictor of the future, I would love to see this continued growth over the next 20 or 30 years. Anything could happen, but I'm putting my money on O. Again, not financial advice, but I wanted to teach you guys about REITs, especially if you didn't know about them before. But let me know your thoughts. Do you own any REITs? If so, which one is your favorite? Drop those comments below. And guys, as always, I will see you in the next one.